Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. What do we got going on with the markets? Well, the markets have got a lot of volatility, right? A big up day followed by a big down day, big up day, big down day. Once again, going nowhere fast. Volatility is going to continue. I do think they're going to push this market up higher one more time. Maybe 6,400 on the S&P. We'll see how that plays out. But in all my life, now I'm an older guy, right? I've been around a while. I've never seen it like this, never seen it like this before, where the worse the economy gets, the higher the stock market goes. The worse the economy gets, the higher the stock market goes. It's almost like a perfect inverse correlation. If you can get the economy to crash, you can get the market to go to the moon. I firmly believe that, right? Because you see, the market's not based on reality anymore. It's just a big facade. Economy, well, the economy is real, but the stock market, very fake, very fake. A facade created by the printing of money, created by having artificial interest rates artificially low for what, 16 years they held them low, then they let them go up and things started to break, and now they're going to bring them back down again. It is completely a fake facade is what this is. The market is not real, but the economy, if we can get that to keep going down, we might be able to push the stock market higher. And the economy is going down. I mean, now, I'm a real estate broker. I mean, we could just look at the housing statistics, right? Down about 5%, down 5% month over month. That's just pending home sales. They're in free fall, and they're already at the lowest point since 1995, when we had about half the population we have now, right? So the sales are just falling off a cliff. Now, that's a sign of a bad economy. Now, here's the other thing, right? Auto delinquencies are at the highest rate ever. Now, if we can get some more people to go delinquent on their autos, I think we can get the stock market up higher. Credit card delinquencies, record high, right? Record high. If we can get some more people just to go out and spend money on their credit card and not pay any of it back, we can get the stock market to go up higher. Now, just last year, 7,300 retail stores, they closed. They went out of business. They're gone. They're not coming back. 7,300. Now, that may not sound like a lot. The prediction for this year is 15,000 retail stores going out of business. We're running out of retail stores. But Mike, we got Amazon. Amazon just delivers it to the door. And that could explain part of it. Now, Amazon earnings, they weren't that good. I'm looking for the stock market to start to fall. But if we can get people to default on their mortgages, get more people into foreclosure, maybe we can keep the stock market going up. Maybe we keep it going up higher. Now, it's not just retail stores that are closing. It's also banks, right? Okay, the banks, they're shutting down. Why are the banks shutting down? Just last year, over 1,000 branches closed down. Now, Bank of America closed 132 branches. They're leading the charge because they're going to be the fall guy. When this thing falls, they're going to be the one that gets blamed. They got 132 branches last year they closed. U.S. Bank, one of my banks, over 101 branches closed. Wells Fargo, 92. Chase, 90, right? Okay, so the branches are closing, and there's predicted to be more closures this year, that more than there were last year. What's going on? But Mike, everybody's just banking on the internet. You can go to Capital One and you can just do the online banking thing. You're an old guy. You are so far behind the times. Look, if the banks were going to fail, would I want a lot of branches or would I want a very few branches? Would I want everybody to be doing business online? Yes, I would. Why? Because when we fail, when we do the bail-in, you have nowhere to go to take the pitchforks. Where are you going to take the pitchforks? You got to take the pitchforks when this all comes tumbling down. And it's going to come tumbling down. The banks are in dire straits, right? They have the best business in the world. Man, they can get money. They can borrow. They get money. You go deposit on their CDs, get 4%, right? Well, they loan that out. New car loans up close to 10%. Home loans up over 7%. And they could make money on the spread, but that's not good enough. We're going to take take the money to the gambling casino. We're going to bet it all on Fartcoin because we're so far behind the 8 ball that we don't know how to get your money back. We're going to just gamble on any new crypto that comes out, be it the Trump coin, the Melania coin, the Hawk Tuah coin. We're just going to throw it at the dice and see if we can get your money back. Believe me, this is going to come crumbling down. People tell me they're not worried about the banking system. And that's fine. You can have all your money in there just as long as you're willing to lose it. That's all I'm saying. At some point, this does not work. At some point, this is not sustainable. Now, are you going to be upset? Now, look at, okay, here's the thing. Banks, big trouble, right? The commercial real estate loans down 90%. Okay, so let's say Bank of America is the sacrificial lamb and it falls over, it goes down, right? Okay, well, that's a big problem because they're all intertwined, right? So maybe the FDIC, maybe they can bail out B of A, right? Maybe they have enough money to go in and bail them out, but they're intertwined. The next one goes down, the next one goes down. FDIC runs out of money. Are you going to be okay with the bail-in, right? Okay, now the bail-in or the bailout. Now the bail-in is going to be your money coming, right? The bailout will be from the government. Now they're going to have to print, it's estimated, let's call it $3, maybe $4 trillion to bail out the banks. It could be a lot more than that because nobody knows how big the derivative market is. It's in the quadrillions, and maybe the government has to print a quadrillion. So that way, at least it's not a bail-in, right? It's not your money. It's the government's money. Now, of course, that when the government prints a quadrillion dollars, it's going to make your money completely worthless. So it doesn't matter if it's a bail-in at that point or a bailout at that point, because either way, your money's going to zero. All the money you had in the bank's going to be gone. Now, what do I suggest? A lot of people ask me that. Actually, nobody asked me that, but I tell them anyways. I suggest real money, right? Money that you're holding in your own possession. Now, maybe I'm wrong. Maybe there's no problem. Maybe nothing ever happens throughout your whole life. But you might be wise to pull some money, some of the fiat money you have in the banks, and get some real money, real wealth, gold and silver as I call it, and just hide it somewhere, stick it aside. It might save your life when that big reset starts. But you see, the banks, they're in big trouble. They're going to start to fall over one after the other, one after the other. They're going to go down. And they've already started, right? I mean, we had the big one, Silicon Valley Bank, but there's been these little ones that no one's talking about. We talk about here because we're aware. We're aware. Lindsay, Oklahoma, right? They did the bail in. The government did not bail them out. They bailed it in. Now, the FDIC did bail out up to 250, but over 250, they said, no, you're not getting your money back. Not unless we can sell our assets for more than our liabilities, then we'll give you your money back. That ain't going to happen. So it was the first bail-in of the U.S. banks. The next one was in Chicago, Pulaski. Pulaski went down, right? That was this year, just a few weeks back, right? Nobody's talking about that. You probably never even heard about that, right? It only cost the FDIC like $50 million, so that's really chump change, right? We print that in a second in the U.S. And isn't it great that we live in a country where we can just print money at will and it doesn't do any harm, right? It doesn't do any harm. People tell me that that doesn't matter. We're at 36 trillion, 120 trillion unfunded liability. That's just called 150 trillion. It doesn't matter if we get that to 300 trillion. It doesn't matter if we get that to a quadrillion. That's what they're telling me. That's Keynesian economics for you, right? I'm an Austrian economist. I want free markets. I want the interest rates to roam freely. Now, here's what's funny. Okay, so you got these guys that are called the bond vigilantes. Bond vigilantes, what are they? Are they real people walking around on the street? Little vigilante action? Well, what they do is they keep the government in control. You see, a government, they keep lowering the rate on the short end. But the bond vigilantes, they're bidding up the market, right? They're bidding up the long end of the curve. What's the long end effect? Well, it affects your mortgage rates, right? It affects the rate that you buy a car at. It affects the payment on your credit cards, the long end. That affects the consumer, right? They lower the short end. Bond vigilantes coming in and they're bidding the rate up on the long end, right? Bidding the rate up. Okay, so There's no such thing as bond vigilance. It's just the market going, hey, we don't believe you. We don't believe that you can lower this to zero. We believe that inflation is still alive and kicking. We're not buying your 3% inflation number. We know inflation's 8 or 10%. Well, here's the thing. So they keep them straight, right? That's the interest rate part of it, right? So when they lower the rate, the bond vigilantes bid up the rate on the 10, 20, 30 year. Well, if there's bond vigilantes, which there really isn't, but if there were, there would be what's known as gold vigilantes. Now, what are gold vigilantes? Gold vigilantes, they can smell things. They got really sensitive nose, like a dog's nose, can smell stuff really far away, right? They can sniff out the inflation. They can sniff out that they're going to devalue the dollar. The gold vigilantes are out there, and man, they're bidding up the price of gold. You know what? The exchanges have run out of physical product. The London Exchange, the COMEX, their physical product is getting low, very, very low. Where are they going to get the gold from? Maybe the government still has some. I don't think we do, though. Somebody go look in Fort Knox. Open up the door, take a peek. Please do it. But we're out of gold, right? The physical gold. Now, we got a lot of paper gold, and that's what the COMEX is. That's what the London Bureau is. They're paper gold, right? Now, in the silver market, it is at extreme numbers. For every 1 ounce of physical silver, they have 400 ounces of fake silver. That's where the facade comes in. It's one big facade that we're dealing with right now. But the gold vigilantes, they're seeing this stuff. They're seeing the lowering of interest rates and going, no, no, no. You're going to raise inflation extremely. We may hyperinflate. We're going out of the dollar. We're going into gold. They see them printing money for the bank bailouts, bail-ins, whatever you want to call it. But they see the printing of money, right? And they're saying, you're not going to be able to print 3 extra trillion this year. We don't allow it anymore. We're going to bid up that price, bid up the price. Now, what does it mean when gold's going to be hitting 3,000 soon? Going to blow right through that, go to 4,000, 5,000. People think gold's expensive because it's at a record high. It is one of the cheapest things on the planet. It's real wealth. I'm telling you, the dollar, it going to keep dropping. Don't get me wrong. They'll keep using it. A lot of people keep accepting it. At some point, they're saying, no, I don't want to take the dollar anymore. I want some silver. I want some gold. Maybe they would go back to a gold standard where silver is real money. We'll see how that plays out. Maybe we go to that Bitcoin standard. All those Bitcoin people, they're very hyped up on their product. Problem is there's like 30, 40, 50,000 of these products all doing the same thing. Somebody, please, if you know, in the comments, leave a question, leave an answer for my question. What's the difference between Bitcoin at roughly 100,000 and Bitcoin Cash at 4,000? Someone leave me a definition of what they both do exactly the same thing. 21 million coins each of them. They're both on the blockchain. What's the difference? Why is one at 100,000, one's at 4,000? They go, but Mike, it's a network of the 100,000 one. Bitcoin has a network. I beg to differ. So does Bitcoin Cash. About 400. You can use that. It's actually quicker to use it in the real money. Is if you want to talk about a currency, it runs faster than Bitcoin. So Bitcoin Cash, $400, Bitcoin, 100,000. There's no difference is my point. How do you know where the value is? You don't, and we'll see how it plays out. Maybe that Bitcoin, like Mike's wholesaler, he says it's going to, 30 million a coin? Oh my, maybe it will. I don't know where all that money's coming from, but it would make him the wealthiest person in the world just because he was smart enough to buy Bitcoin. Well, I don't know if he's smart enough to buy Bitcoin, but he's doing it on leverage. And one thing I know is that is not a smart move at all. So far, it's working for him. As long as it keeps going up, leverage is great. Look at, I've leveraged houses out when I was a young kid, and when it was going up, I was a genius. Once it started going down, I was the biggest fool there ever was. I mean, it just shifts so quickly. People are admiring you, then people are laughing at you. It just depends what direction it's headed. That's just how it all plays out. But anyways, these gold vigilantes, now they're out there and they're buying hand over fist because if you're smart, you can see what's happening. They're running out of physical product on the exchanges. Soon as one of those exchanges breaks, and it will break, you're going to see silver going way past triple digits. You're going to see gold spike up to $8,000, $10,000. I mean, it's cheap right here. you can still get it. You have a little time left. We call it stacking. That's what us stackers do. We buy a little bit, wait, see what happens, buy a little more, wait, see what happens. You know, there's not 1 ounce of silver or 1 ounce of gold that I regretted buying. Now, granted, I started buying silver back, well, $5, right? Well, actually, I take that back. I started buying it at $12, went to $5, but then I kept buying it, right? $4.85, I think, was the lowest I got it at. But anyways, it kept going up, kept going up. No regrets at all, right? I mean, we're only at 32 now. When it hits 50, when it hits 100, there's really no regrets. Same with gold. Started buying gold at 300, 280, I think, to be exact. I hit that low, and that was just like 20 years ago. It really wasn't that long ago, right? Going from 280 to, what we at, 2,800, 10x, 10x. People go, when's gold going to move? Where have you been? It's kind of moving. Anyways, I'm Tall Mike. You like this stuff? Give me the thumbs up. Punch the subscribe button. Get out there, everybody. Enjoy the day. Bye-bye now.